Building products company CSR delivered full-year results today. Net profit for the group rose 13% to $90.2 million. In December, it also sold off its sugar and renewable energy company Sucrogen for $497 million. So just how is the pure-play builder travelling in our patchwork, builder supply company travelling in our patchwork economy? I'm joined now by Rob Sindel, Chief Executive of CSR. Rob, welcome to the programme.
Thanks, Tiggy.
Well, these are your first annual results. It's a tough climate out there for CSR.
It is actually. The construction industry, both residential and commercial construction, is difficult. It's difficult for the builders. It's difficult for the suppliers, and it's driven by lack of confidence by the consumer. Quite frankly, biggest purchase decision they ever make is buying a house. So a lot of people are putting off that decision.
So tell me about the budget. Has that had any impact on consumer confidence?
Well, I think it's more about their whole view of the world economy. They read the papers, they see what's happening more so than the budget. And I think people, we saw in the retail sales figures you talked about previously, people are saving a little bit more. They're putting off discretionary expenditure and just being a little bit more cautious than they have been in the past.
Going to your building products division, profits up 3% on last year. Tell me, how damaging was the government's cancellation of the insulation scheme?
It was particularly damaging. The issue there was that they'd introduced a program that we expected to run for 2 years, 12 months into the program. They pulled the program. We'd ordered a lot of material from overseas. We'd put on people. We'd spent a lot of money on systems and getting things right. And then over a weekend, it all sort of unravelled with, there was a couple of very unfortunate deaths, and it all unravelled very quickly, and they cancelled the scheme. Unfortunately, we'd ordered that product. It was on its way to Australia, and the boats kept coming.
And that went through the bottom line, obviously.
Absolutely, because we bought the product, we paid the suppliers, and what we've done, as you would have seen in the results today, we've written off $23 million worth of stock to account for that product.
Now, your other albatross must still be Viridian, the glass business. You've got another write-down of $121 million. Patient shareholders, I assume, but how long before the business starts paying its own way?
Well, it's a great business. I mean, you would expect me to say that. But if you look at the EBITDA, which is the cash earnings that come out of the business, we're actually $30 million this year. So we're generating good cash. At the EBIT line, it's $3.6 million. The markets, the commercial market, which it has its major exposure to, is down nearly 30%. You've got a dollar we saw just before at 108. That all impacts on the business. What we've done is we've looked at the business, we've remodeled it, we looked at the exchange rate, we look at the commercial construction, we look at the government's push to implement energy efficient building codes, and we revalue and we came up with what we think is a fair valuation at $402 million.
You mentioned the $8, the commercial market. Presumably you've got the retail market. That's also subdued, and I guess the other side of thing is your new home builder looking at buying maybe the sort of energy efficient glass, the high quality glass. They're presumably less tempted to go for that sort of thing now. They're all looking at their budgets too, and the government's not helping there either.
Well, absolutely. We want the government to implement better standards, better building codes, because that drives lower energy use. And you can talk about introducing carbon taxes, but really what we've got to do is be less energy intensive as a society. We've got to not turn our air conditioning systems on. We've got to not use the heating in our houses. And the best way to do that is to insulate your house with good insulation, but also good glass products that actually seal the house, and less propensity to use those unrenewable resources.
Aluminium side of the business,
Yep.
Your EBIT is up on your guidance thanks to the US dollar, really. What's your outlook for the currency now?
Well, it was more up to the aluminium price than the US dollar. So we sell aluminium in US dollars, and then we translate that back into Australian dollars. What's happened is like most of the commodities around the world, the price of aluminium has recovered. What's happened during that time is the run up in the $8, when we convert it back to profit in Australia, makes the profit a little bit lower. We've seen the currency run up to 110, and today it's 108. That puts pressure on both the glass business and the aluminium business. So our long-term view is somewhere around parity, but as we saw your commentators earlier, there's lots of different views on where the dollar's going to be in 12 months' time.
Well, we might have a look at that next. Are you particularly vulnerable to this proposed carbon tax?
Where the vulnerability is, and it's really for Australian manufacturing, you've got 1 million people employed in Australian manufacturing in Australia, and the government's taken a view of drawing an arbitrary line that says, well, if you're above this line, 2,000 tonnes CO2 equivalent per million tonne of revenue, then you get some relief. Below 1,000 tonnes of CO2 equivalent, there's no protection for industry. The issue there is a lot of those businesses are trade exposed. If you look at our insulation business, our Hebel business, they are all employing people in Australia in manufacturing jobs, and they are trade exposed in some way. So what we want the government to do is to take an approach, a sector-based approach that looks at each of those industries and assesses them against their exposure.
Finally, I heard somewhere that CSR sometime in the 1970s was the second largest company to BHP Billiton. Do you have any hope of returning it to its former glory?
Well, we still think we've got some glory. We're not the same size as BHP. I think, the board of CSR, what we've done in the last few years is actually become a focused organisation. BHP did the same thing when they sold off their steel assets. In the 1970s and 1980s, people took different investment decisions. We're happy to be a focused company. We don't think the conglomerate structure worked for CSR. It meant that, we sold the Sucrogen business and we've returned a lot of money to shareholders, but former glory, we think we're pretty good where we are at the moment.
A strategic review on the way. Rob Sindel, thank you very much for joining us.
Thanks, Tiggy.